So we can talk about beneficiaries because this has really
Yes.
come up a lot. Okay. And I love, and you always have great questions, Steve. So you're welcome to interrupt me anytime with a question. Interrupting is one of my ground rules. For anybody out there who's not an interrupter, it's really, it's hard. You never get a word in edgewise, and the people you're talking to always know what you're going to say. But anyway, so here's what I've learned about beneficiary designations over the last 11 years. They are essential. They are an essential foundational piece of any plan you have. And what happens is they often get overlooked. Um, I've run into people who have accounts at banks, and the bank never asked the customer who they wanted to name as a beneficiary. They left it for the customer to bring up. And I've got a probate like that right now. It's not a lot of money, but whatever, because the bank didn't think it was their job to ask. So
Mhm.
what is a beneficiary designation? It's a written instruction you give some financial institution to tell them what you want to happen to your assets when you pass away. So that's banks, 401ks, IRAs, stocks, anything that you own that could be liquidated, and you have not told somebody whom you have not told the institution who you want to get that after you pass. Problem is that when you don't do that, even if the only beneficiary by law is a spouse, that spouse still has to go to court to get the right to get that asset. And that's money that could have been not spent. I've said here many times, when somebody passes, the only thing you should have to do is grieve. So people think about doing estate planning. Hopefully, most of you listening or watching have yours in place. Please, if you don't, just do it. Just do it. They think about wills and trusts. Beneficiary designations override a will. So if your will says, my children, Susan and David, split everything 50-50, that's great. The court will do that, but only after Susan and or David go to court to get the right for the financial institutions to do that.
Oh, I
If you
didn't
would,
know that.
oh yeah, oh yeah. So if you tell a financial institution that your beneficiaries are Susan and David, the will could say my money goes to Joe and Sally, and Susan and David would get the money because the beneficiary designation overrides your will. So you want to be really careful, and you really want to set them up. Um, they override a will. I gather they'll sometimes override a trust. I've not had that happen to me, but saying it's not possible. And the mistakes happen because or people name minor children. Susan and David are minors, like they're six when somebody names them a beneficiary, and the parents die before they reach the age of 18. And then what happens is a guardian has to be appointed to manage that money because children under the age of 18 can't inherit money. And people don't know that. So oftentimes you're working for somebody and they have a 401k plan. So you invest, you say, take 3% of my money every week or whatever it is, every paycheck, but nobody asks you about a beneficiary. Or you set up a bank account, like I said, and they don't ask you and you don't think to know. Annuities and pensions are the same thing. I've had more than one probate because somebody was a beneficiary of a pension and didn't name a contingent beneficiary. So the person who had the pension died, the beneficiary died, and there was nobody in the next level down to collect the pension. And it took 15 months, maybe longer to get it settled. to get the estate settled. And it wasn't a lot of money, and it could have all been avoided. So the beneficiary designation is the written instruction, and how the problem pays out. I haven't had this happen, but I know it happens. So a couple is married and they are named beneficiaries on each other's life insurance policy, and they mistakenly believe that the divorce makes null and void that designation. Well, it doesn't. So both parties remarry and think, of course, now my current spouse will be the beneficiary of that life insurance, and they are wrong. So what happens is the spouse passes, the former spouse shows up with a death certificate, and they get all that money.
Wow.
Because that's what the law says. So people will forget to change those beneficiary designations. And it's not done malevolently. It's done ignorant. It's done out of ignorance. So they're just. I'm looking for the examples that I've learned here. If you don't do it, you want to review your beneficiary designations on a regular basis. So I've come to believe that if you've appointed spouses as primary beneficiaries and you've appointed children as contingent beneficiaries, but you don't want those children to inherit until they're a certain age, then you might want to do a trust and make the trust the contingent beneficiary. So you've got something in place where money can be funneled. I love using my hands for all those people who are listening. So I love, so the idea that money gets funneled at your direction to an entity that somebody else administers so that the way you want your assets distributed gets done. And since somebody can inherit at 18 and you wouldn't have wanted those children to get anything until they were 22, if you die between 18 and 22, they get that money and it wouldn't be what you wanted. So,
wow.
Yeah. And there's no reason in the world that anybody knows this unless they talk to somebody who works with it. So, if there's anybody listening who thinks, well, how come I didn't know that? Or how come somebody didn't tell me? I can't say why somebody might not have told you, like a financial person or an attorney, but why you didn't know it. You know what you know about whatever it is you do. There's no reason for you to know about something else. So anyway, I've talked enough. We're almost 15 minutes into my 25. So
No.
yeah.
You're fine. So just having a simple will is not enough if you've got assets.
Having a simple will does not avoid court necessarily. It just doesn't. You can't say my house goes to Susan and David equally in a will, because they have to go to court to get the right to own the home equally. You can't say they get my money equally without going to court unless you made some kind of beneficiary. Having a will with just those stipulations in place is better than having nothing, because if you have nothing, okay, and Susan and David have siblings that you would have disinherited, then Susan and David are now obligated by law to split whatever is in that estate with those siblings that their parents would have given nothing to. So the will is better than nothing, because the state, whatever state you're in, or Commonwealth or whatever, they have a plan, and the plan is intestacy, and money gets distributed by law. So the one probate I have now, wife died, bank didn't talk to her about a beneficiary, didn't name one. she's got a daughter from a previous relationship. And by law, because there's no will, that daughter, who was estranged from her mother, has a right to 50% of the estate. I mean, it's the law. There's
Yeah.
not any, I mean, the dad, the husband is disappointed, but he appreciates that it's the law. Had his wife named a beneficiary or even had a will that said, my husband, Steve-O gets everything, we wouldn't have had, might have had to notify that daughter, but she wouldn't have a right. So a basic will is much better than nothing. The beneficiary designations are essential and they often get overlooked or they don't get updated. And it's really important that they get updated. Child gets disabled. They can't inherit money. You need to do something else. Because if they're getting government benefits and they inherit money, then you're in this race against time to keep them from being thrown off government benefits until you get rid of their assets. Lots of reasons, none of which I knew 11 years ago. None of which, in terms of the importance. So it's
Debbie,
really
I
such a
thought about you this weekend. Um, there was a NFL football player, 27 years old, um, made a lot of money, and he committed suicide this weekend. Now, there's no way you could ever have planned for something like this, but could you?
if he had documents in place, he could. Life insurance, life insurance will ask for what they call a long form death certificate, which will list a cause of death. I don't, in the olden days when my father was really young, because he had attempted suicide, there were like lifelong exclusions about suicide. Okay. Now I think there may be 12 or 24 months. If within a certain period of time of the policy issue, somebody takes their own life, I think, I don't know this, I think the policy can be voided. So they ask for long form death certificates so that have a cause of death. But a will and beneficiary designations, not for life insurance, if there's that exclusion, would have stood up regardless of whether somebody took their own life. Too many people are taking their lives. It's just, oh my God.
Oh, I know.
So,
I know.
and hopefully, because I had my first financial planner, one of his areas that he loved was working with athletes. This was long enough ago that they weren't getting quadrillions of dollars, but they were getting substantial bonuses. Working with them right after they signed, so he could protect their money, because he'd experienced secondhand young men or women, probably more young men then, but young men who'd gotten even whatever, a few $100,000 or $1 million, and they squandered it because nobody was there to say, no, 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 you have to you have to protect it.
I got it, Debbie. I've got to ask this question. I think about it every show, and I finally decided to ask you.
Okay.
Uh, this is a very strange question.
Okay.
We had an estate planning attorney here in South Florida who did a show with me for 8 years. We had a great relationship. He even brought his son on a couple shows who did personal injury. But he did, this is the whole key to this story. He did estate planning. Well, I don't know if you heard about it last year, but his son murdered him. That's not what I'm asking. I'm
Okay.
asking is the wife said that her son had been stealing money from her. She was a beneficiary on the life insurance. How was he able to get away with that?
I have no idea. the thing that came to my mind, and I don't know, is if he had his father's power of attorney or his mother's power of attorney, which is,
Oh, maybe that was it.
well, that's, I have no idea how he got away with it in the world of online stuff. I mean, if somebody, you really, powers of attorney, you really have to trust the person. If somebody had access to
Yes.
your online stuff, who knows what you could do? You could make withdrawals, certainly, um, without any proof that you have the right to do that necessarily. Because if I know your password and I can get into your policy or your bank account, um, they don't know that it's not you or that it's your agent. They just know that somebody's taken money out of your account. I have no idea.
Well, the
That's
only reason I brought because he's an estate planning attorney, and you would think that he had all of his bases covered. I'm sure he didn't plan on his son murdering him,
no,
but
no. But you say the wife said that the son stole from the life insurance, so that's a whole different. I mean, I have no idea how that would happen.
yes.
Wow, wow.
So my next question is how do you choose who, when it comes to beneficiaries and there's children involved,
Yeah.
how do you choose? Do you have guidelines as to how you divvy up the money, or is it just something simple? Everybody gets,
You
their
have to
portion.
say my guideline is you don't appoint one with your thinking that they'll distribute to everybody. So if you've got three or even two, you distribute equally. You don't have to distribute equally. You can give different percentages, but for the sake of you distribute equally. So one of them shows up with a death certificate, and the bank writes the checks to all three. Soon as you appoint just one, and the one is not happy with the others for how they treated you while you were dying, or they've always disliked the others and they think it's about time you got your comeuppance, they have no legal obligation to distribute that money. It's all theirs by law.
Hey, Debbie,
So
I'm so sorry.
I know we're
Your
out.
show goes by so fast. Tell people real quick how they can reach you.
So you can find me at Deb Baker, two B's, Deb Baker at London Baker Law, London like the city, londonbakerlaw.com, 813-586-1332, 813-586-1332.
Thank you so much, Debbie. Have a wonderful rest of the week. We'll see you next week. She's on with us the last Monday at 9 p.m. Eastern Time. God
Okay.
bless you, Debbie.
See you too, kiddo. Thanks, Rebel. Bye.